Hey traders, I've been working on something new and I'm going to take a little bit of time today during this video to let you know just exactly what that is. All right, traders, Akil Stokes here, head currency trader and trading coach at Trading Power, and welcome back to yet another fun-filled weekend review video. In today's video, I'm going to tell you a little bit about what I've been working on my my explorations and adventures of being a professional trader. Hopefully, I get a chance to take you on the charts and walk you through one of the trades that I'm actually in. But I want to start off by talking a little bit more about the evolution of a trader. And actually, before I get to that, I want to talk about this week. This week has been an interesting week. Not only is it the end of a month, not only is it the beginning of the month, and beginning of the month, we know that we have non-farms coming out, but there were a lot of fundamental reports coming out. We had the GDP, we had the FOMC statement. We've got today, which is unemployment claims and kind of the middle ground. And then tomorrow, Friday, we've got non-farms. So we're kind of sandwiched between two major news events, and it's been an interesting week, especially with the movement we saw yesterday. Now, myself, I haven't been involved in too many trades. There were a few higher time frame trades I've been watching. I did enter 3 in the live room on Wednesday, which all got stopped out. Luckily, one of my higher time frame ones, the Pound Canada, I think it was, or Pound Aussie one that we've been watching for 2 weeks now, finally rolled up to hit my target ones for about 75 pips. So more than made up for the 3 intraday losses. Just another reminder that patience pays off. And it wasn't really until today that I entered a lot of trades. Now I'm currently in 6 positions. If you look at my chart right now, you can see I'm in Pound Aussie short, down about 2. I'm in Euro Pound, right about break even. I'm in Euro Yen, I'm in Euro Aussie, I'm in Dollar CAD, and I'm in Pound CAD. So none of these positions probably right around break even. You can see 3 are in the green, 3 are in the red. So they're not really doing much aside from Pound CAD, which came close to hitting targets. And syndicate members, just go back through the videos I've been doing all week, go back through the charts that I've been leaving on the trade floor, and it's an explanation of most of these trades. I think Euro Pound, yeah, all these should be on here. And actually, the Euro Aussie trade was in last week's weekend review video, that beautiful butterfly pattern up there. And actually got a butterfly pattern I'll show you later on Pound Dollar, which is pretty cool. Didn't plan on doing that, but you know what? I'm in the giving mood, so let's do it. It's far away, so I'll give you guys a few, well, maybe a day's notice, depending on how Non-Farms comes out tomorrow with the fireworks show and everything. We know that can be a wacky day. Anyway, as I get back on topic, it's also, we talked about the busyness of this week. It's also a very slow time in the market. It's the dog days of the summer. It's the end of July, August. A lot of professional traders are on vacation, except for me. I'm home this year, no special trips planned. So good old Pennsylvania. But a lot of professional traders are on vacation, taking breaks, reaping the benefits of what they've sown throughout the year. And the markets typically slow down during this period. And then we speed up during when September hits. And what I usually do during this part of the season is I use this as my time for continued education. It is in my plan, and something I always advise traders to put in their trading plan is, always, schedule time for continued education. We never want to get stagnant. We never want to settle and say, okay, well, I've been trading good. This is it. I stop here. We always want to increase that learning curve. Kaizen, continuous improvement, great Japanese philosophy. So each year, maybe twice a year, I try to continue my education either by taking a course, reading a book, or in this case, usually the summer, by testing a new strategy. And that's what I'm doing right now. I'm using August to kind of work as my preseason, running through the test of a potential new strategy and not maybe just a new entry technique. And then hopefully, if the testing goes well, in September, adding that to my arsenal. Now, I've done this in the past, and it doesn't always pay off. So that's why we have to do the testing. We have to do the testing. We also have to do the live trading of it. Because last year, I had a system that was on the range bar chart, worked great during the back testing, was consistent profitability, banging out pips left and right. However, when I went to trade that live, because the range bars move so fast, I wasn't getting filled. We got to keep into account the spread too, because we all know during back testing, we always get the perfect spread, right? We never miss a trade. We're always in exactly when we should be. In real life, sometimes you're a little bit late. Sometimes the market moves a little bit further before it's time for us to get our limit orders on. Anyway, what happened with that system was when I traded it live, I was getting slipped by about 4 pips. And what that ended up doing was I was 4 pips late in the trade. So taking 4 pips away from my risk or away from my reward, adding 4 pips onto my risk. So an 8 pip turnaround per trade. And that 8 pip turnaround took it from a strategy that had a really good positive expectancy to one that not so much. So it's always important to do your due diligence, do your testing. But what I'm looking at this year is just a more aggressive way of entering trades. So I'm not looking to trade a different style, still structure, still price action based, but entering a more, using a more aggressive technique to enter. And one of the things that I teach my 12-week transformation members is, we have 2 steps of a trade. The first is the IPDE, identify, predict, decide, execute. Once you go through your CTS system, once you find a reason to trade, once it's a valid trading opportunity, the next thing we want to ask ourselves is, well, how can I enter? And there's different levels to that. There is the most aggressive level where you're just putting a limit order there. Bam, the order's on. When it hits it, it's filled. You guys see me do this with advanced patterns a lot. The second one is you wait for a higher high, higher close, or a lower low, lower close technique. You're giving yourself a little more safety because now you're waiting for some confirmation. After that, you can go on to double tops and double bottoms where you're waiting for the market to hit that level and then actually retest and really prove that it wants to hold because the second retest is rejected. And then you can go on to 2618, which is very conservative, where you're waiting for that retest, you're waiting for a break of that retest, and then you're waiting for a third retest, a true tell that there's a rotation in trend before taking that trade. So what I'm doing is slowly working my way more and more aggressive. And you see a lot of traders do this. Typically, I encourage traders to start off being conservative. You don't want to put your hard-earned money at risk, especially when you're getting new at identifying levels, because you're probably not too good at identifying potential reversal zones. It's still a little, throwing darts at a dartboard. So you want to be a little more conservative. But as you get better as a trader, as your eyes really start to pick up on the levels that are important, the level that the market is really going to reverse at, you can afford to become more aggressive because your analysis is that much better. And what I find myself doing now is missing a lot of trade opportunities because I'm waiting for that confirmation, and that confirmation just isn't occurring. So what I'm looking at now is just a more aggressive way to enter a trade. And a great example came here on the Euro Pound today. Now we're looking at the Euro Pound. There's a cipher pattern setting up further here as well, but we're in a downtrend right now. I guess 10 out of 10 traders, I dare say 100 out of 100 traders could look at this chart on this time frame for this period of time and say that we are in a downtrend. If you don't, you go back to baby pips and learn what a trend is. But the overall ebb and flow is down. I think we first looked at this on a 240, made it a little easier here. And we started consolidating as we zoomed the chart in. We started consolidating as we got down to this level. We haven't broken our previous structure high. We've come down, and we're just chopping up and going sideways in this level. If you notice, we haven't had new structure highs here. We had a little small inside leg here. We came up, tested it, got rejected, came back up, refused to make a lower low, and then we're rejected at this level as well. And this is where I entered. So it was a structure-based trade looking to get short. And what I was really paying attention to, there was a pattern hidden in here well, actually, now that we look at it. Saw this in the live room earlier. Didn't take it because of the pattern, but pretty cool to see that these things are sneaky and they exist everywhere. But what I was looking at was a retest of our structure level right here, a retest of our previous structure highs, looking left. And the entry technique I'm looking for is I've been learning a lot and actually talking to our live room members a lot about reading candlesticks, reading price action. You may have heard me in a weekend review video in the past saying, create a story. And I'm getting a lot better at identifying where the powerful zones are at for buying and selling pressure. And when you see candlestick formations like this, when you see the market push up, push up, push up, again, 1, 2, 3, 4 bullish candles in a row, push up, get a long wick rejection, push up again, get another long wick rejection. These end up being, and one more right here in red, these end up telling a story, and these end up being entry techniques that allows me to get in the market at a more aggressive level. I don't want to wait for a confirmation. I don't want to wait for a double top. I want to get in because we've seen plenty of times where the market will get this rejection and boom, then we'll come straight down. So again, working on a more aggressive way using price action, using candlesticks. It's not necessarily pin bars. Pin bars are good, but it's not necessarily pin bars, but just reading the price action of reading the candlestick at that level, and seeing how price action reacts to the buying or selling pressure, depending if I'm going long or short. So that's what I've been working on, really trying to define a system. Not a system, but a technique to use that. And a lot goes into it. Is it worth it being this aggressive? Is it not? Is it worth, there's a way to do it. I'm working on with false breakouts too. If we do break and close above and then we come right back down on the next candle, there's a lot that goes involved with it. Of course, profit targets, where do you put stops like that? But that's why, when you get some free time, it's worth doing that. And again, the process I like to go through is, first coming up with a theory. So thinking about what do I want to test, and then just taking a random chart, scrolling through it, going years and years and years back, and just seeing, taking notes. What is happening at these levels? How is price action reacting? And then once you take notes, you can kind of put together a makeshift plan, your initial plan of, okay, if then thought process. If I see this, then I look for that. If this happens, then I enter here. If I enter there, then stops go there, and then targets go there, and putting together that initial plan. The next step is then back testing, then putting it through the ringer and seeing if it's actual profitable. If you're going to make money off of it, if you're investing your capital for a good reason, or you're just gambling. And then after you're back testing, crunching numbers, seeing if there's any way you can make it more efficient, or if there's anything that stood out that needs to be changed. So it's a whole process of back testing. It's not just finding, reading about Gartley's or something on the internet and saying, oh, I'm just going to start trading them live now. It's a process. So that's kind of been what I'm working on right now. So yeah, there you go. That's it. Let me show you something else. I feel like I should give you guys something on the chart. Pound dollar. We broke this down today in the live room. And actually, I think it was pound yen. Let's go to pound yen 4 hour. I probably scared half of you guys away. You left. Pound yen 4 hour. Was it pound yen 4 hour? It would help if I went to the 4 hour. Here we go, Keel. Pound yen 4 hour. We're looking for that same type of rejection trade down here as price action came back in the previous structure. You can see we're bouncing off of that. Here's what we're looking at longer term. And usually if this were the live room, I would pause the tape or I would pause the live room, put up a poll question, ask some questions, then we discuss it. But here's what we're potentially looking for with pound yen. If I bring up my big boy chart, if we go to the weekly, and this is something that's far away, but I'll give it to you guys in advance. If we go to the weekly, we're going to see where our previous structure highs are, right up here. Right up at 175.37s. You can see it on the daily as well. Here are our previous structure highs. We're still overall in a bullish trend here on pound yen. You can see we've been broke previous structure highs. We've been trending up. We're kind of stuck in this ascending triangle right here, waiting for a breakout or at least a retest of this structure high. So I would expect a retest of this structure high here, bigger time frame. If we get to this level, either two things will happen. We'll either break straight up and explode upwards, or we'll put in some type of fight at this level. And because it's on such a higher time frame, the weekly, a little bit of a fight, a little bit of a retracement, even if it's this much, could be enough for me to make profit on a lower time frame trade. So the question is, how do I look to trade that opportunity? And there's a few ways. There's The conservative way, we see if price action gets up there. If price action moves up this way, we look for a double top, like I mentioned before. If you're conservative, you can wait for a 26.18, anything like that. But there's also an aggressive way to trade this, and it's combining it with using advanced patterns. And this is where my deep butterfly comes in handy. And again, I trade butterflies a little bit differently. I look for those extreme zones where I'm looking for our X leg right up here. I'm looking at Fibonacci retracement, swing high to swing low, coming into our 786. So I know it's a butterfly. It's not going to be a Gartley. And if I bring my fibs on, Fibonacci extension from the A leg to the B leg and back down, you can see my 1618 is going to be right here at 75.19. If I take my Fibonacci extension and invert it from my A leg back to my X leg and back down, you see I'm going to have a 127 extension up here as well. And I'm going to have a nice zone between 175.07 and 175.20 for my butterfly pattern completion. Now, I'm not a fan of butterfly patterns at all, but this one actually completes at, boom, the structure level we just talked about, the weekly. So I have a built-in structure level, a built-in place where I can put stops. I can easily say stops need to go above X, so stops need to go above, 75, 45, 75, 50. Stops can easily go right there, giving me a risk of about this much. And these aren't actual stops. I would, use my formula to calculate them later, but just, for weekend review purposes to get this video as quick as possible. We're looking at a stop loss of about this much with our butterfly pattern, even if we're looking for a retracement back in the previous structure, so back into our X leg up here at 74.50, we're looking at a potential reward of about this much. And remember, in these counter trend trades, we're not looking for a full reversal. I'm not expecting the market to turn all the way down here. That would be foolish. I just want a little piece of the pie. I want to move back down to 74.50s. And again, as we go back up to the weekly chart, 74.50s, if we're looking for a rejection up at, again, we're projecting the market's going to come up here. We're looking for a rejection down to 74.50. 74.50, right about here. Is that a possibility? The market could come up here, give us a candle, and reject right down here, even if we're going to explode up? Yeah, it's possible. It's possible. So that's something on my radar again. I won't really take it serious until the C leg starts forming, but something that we did look at in the live room today. And then what we did was we dug down into the lower time frame to look at this point down here and see if there was a trade reason on there, if there's a way we can get long. And right now we're just consolidating. So we shall see. But that's it for this week's weekend review. A little random, not as much on the charts, but hey, that's what I felt like doing today. So until next time, guys, plan your trade your plan. Good luck in the markets tomorrow if you're trading the non-farms. And real important, there is Aussie news out tonight. I forgot what it was, but it is I think at 9:30 Eastern time, 9:30 New York time. So if you're in any Aussie pairs, I'm in that syndicate members. I'm in that Euro Aussie butterfly short. I'm also in a pound Aussie. Check those positions. Make sure your stops are in place. You may want to roll them to stop even or to break even if you can, depending on where you're, how far you are in the profit. And of course, your rules. But keep an eye out for that because those news events usually move the market, and you don't want to get caught up in a gambling situation. So that's your warning. Take care, traders. I will see you guys in the live room tomorrow. Syndicate members, I will see you as well. And have a great weekend. And actually, before we head out, I want to share one more thing. And it was a very nice email I got from Elaine. So thank you very much, Elaine. I was going to write back to you, but I figured I'd give you a shout out on this week's video since you say you watch every week. And I'm not going to read the whole thing, but the middle part is what really got me. It says, I have a subscription for your free Forex preview emails. I've had it for a couple years now. Honestly, I thought you were just like everyone else, always looking to sell something. Until I went to your Turning Point training. You are both great teachers, talking about Jason and I hope you both don't stop teaching. I know that the reality of things is that everyone works to make money to support their families and their lifestyles they want or got used to, but there are few who love what they do. There are a few who love what they're doing enough to go above and beyond to make a difference and not just work for the money. You two are part of that few. And for that, thank you. You don't know me and I don't know you, but every time I watch one of your webinars, you show concern and compassion that not everyone in this field shows. It's as if you know everyone who is watching your videos at a personal level and that you genuinely do not want them to fail. And then it goes on about, I've not yet taken a 12-week transformation. And just want to say thank you for that email. That meant a lot. I actually read this yesterday. Darren sent it to me, and it was I had a meeting in the morning. I do real estate investment as well. I had a meeting in the morning with a real estate investor, a potential hard money lender, and was we're going around in the background, and told him I was a trader, and we got into the conversation about investing money. And I always explain it how it's very hard to do both. It's very hard to be a money manager and a teacher, mainly because they both just take up so much of your time. I remember when I was managing a $250,000 for a client, and I had to be on ball the entire time. I had to make sure everything was in place with my trade, double check, triple check positions, actively manage the trade, because again, when you're doing money management, it's not about the returns you make. It's about how much you don't lose. So trade management and risk management plays a much bigger role, and it's an intense feeling, because you're always checking, you're always changing things around. It's a full-time job. Teaching is the same way. I do my live trading in the room every morning in my live room with people watching. We do education there as well. And in the syndicate, mostly shooting out trade ideas during my day trading periods, or shooting videos a couple times a week. But answering a lot of emails, going over questions, that's the part you guys don't see, and that takes up a lot of time. So it's very hard to do both. And every time I talk to these investors, I start thinking, hey, Akil, maybe I should go back to the money management side of things, and really, because you can make a lot of money doing that. You can make a lot of money teaching as well, but you can make a lot of money off commissions managing money. But emails like this make me, give me no doubt about what I'm doing. Teaching is the right thing. One of the reasons I teach, obviously it helps me make an income as well. But one of the reasons I teach is my way of giving back. I've always been taught that, when you're successful, you should give back. It's just the right thing to do. I don't know why, but I was brought up that way. It's just the right thing to do. Whether it's donating money to causes, or in this case, helping others do the same thing as you. So thank you for the email. Just when I was on the borderline slightly, you brought me back to saying that, hey, teaching is my main concern. Teaching is what I want to do at this point in my life. And managing capital can be something for later when one of you guys out there replaces me. So thank you for that email, Elaine. I wanted to come back and make sure I addressed that in this week's video. And once again, plan your trade your plan, be careful in the markets tomorrow, and I'm going for real estate.